Welcome to December and your final rate update of 2025. Today is Wednesday, December 10th, and the Bank of Canada has announced that they will not be making any changes to our prime rate at this point in time. So unfortunately, no holiday early gifts for Canadians, but let's talk about where we're at with this announcement today, where the economy is going, and what we can expect moving into 2026, as well as what opportunities may exist. If you have a fixed rate mortgage or a variable rate mortgage, your mortgage is not changing. Our overnight rate is still 2.25%. And for you on your retail rate, that means 4.45% with the majority of lending institutions. Today, the Bank of Canada, when they made the announcement, they cited the recent economic data that we have seen in the prints that has, on the job side, showed job creation over the last couple of months, which when you actually dive into those numbers is not surprising. Most of it is part-time work that is tied to seasonal hiring. As we get to the end of the year, obviously the retail sector here in Canada grows quite rapidly with all of the holiday spending that is there. So part-time workers coming in to assist with that. We've actually lost full-time jobs that are tied to the ongoing trade war that we have with the United States. On top of that, we had a very good GDP print, which is a little bit misleading. We saw growth of 2.6% previously, and that 2.6% is tied to the defense spending that was promised by the Liberals. So that is not something that we will be able to maintain quarter after quarter as far as the growth is concerned here in Canada. So while those prints are positive and look good, they're not as great as they appear on paper when you really dig into the numbers. So what does it mean for Canadians and interest rates as we look to 2026? Now, majority of economists at this point in time have said that they now feel as if our overnight rate is at the bottom and they expect it to be held for majority of 2026. That means no more rate cuts potentially. However, when we take a look at that piece of data that is there that all of the economists are digesting, it's just based on the recent prints that we have had, and inflation is still in check. It's not declining, it's not growing rapidly. So that's a good key indicator for us here as to things are in balance. Now, majority of Canadians still feel as if we are already in a recession here in Canada, and that's obvious as well, just based on the amount of spending, how expensive everything is, taxation, etc. So we really need to see what happens moving into 2026. And the key piece for 2026 for all of us is what is going to happen with the United States. We've been waiting all year for resolution to the US-Canada trade agreement. And June of next year, we have the USMCA that is going to be renegotiated or not renegotiated based on the conversation with Donald Trump. This is a key agreement for us, and as much as there are a lot of Canadians that have had it with the United States, feel as if we have to diversify away from them, the issue that we have is that they are one of the largest economies in the world, and they are right across the border. It is very easy for us to trade with them back and forth, provided that the administration is easy to deal with. Now, we don't know if this agreement will be renegotiated in its current form, if we'll get a new trade agreement, or if there will be no ongoing trade agreement with the United States as we get into mid next year. Canada still at this point in time has the lowest tariff rate with the United States in all of the world under this agreement, but that is going to change as we get to next year. We know that with Donald Trump. What we need here in Canada is the certainty as to what the economic conditions are going to look like moving forward. Large businesses and corporations need that certainty in order to make large capital investments, which will help grow the economy. The uncertainty is an absolute killer for business, and we really need some kind of resolution, good or bad, so that people can start to make decisions as to what they're going to do with their company, their capital, moving in and through 2026. So if we do not get a trade agreement with the United States in any form, or tariffs are still remaining quite high, what you could see is further discounting in the overnight rate from the Bank of Canada in order to help the economy. We'd also have to see probably more spending from the government in order to help stimulate the economy as well. If we get some kind of trade resolution, whether that's fantastic for us or just mediocre, at least it will bring some certainty and allow the baseline of growth to potentially continue. In that instance, I do expect interest rates do remain the same through the majority of 2026. And if things are looking good towards the end of 2026, we could even start to see small increases to that overnight rate. So if you're in a variable rate mortgage, I would be sitting tight for right now. You probably have fantastic pricing that is, potentially at the 3.5% range, which is fantastic. And so let's wait and see. I will keep you guys up to date as we move through 2026, as the economic numbers start to come together and we have more clarity as to what that whole situation may look like. As far as opportunities in the market, we still have a ton of mortgage renewals here in Canada. So if you have your mortgage renewal coming up in 2026, or you have friends or family members that have their mortgage renewal coming up in 2026, I can promise you the first offer from your bank is usually not the best offer, and it does take some negotiating to get to the best pricing. We have been helping many clients and referrals over this year navigate the renewal space. Majority of clients are actually still just staying with their bank because the bank does end up being competitive, and that is the path of least resistance, but you at least want to make sure that you're being taken care of. So if you have your mortgage renewal coming up, please feel free to reach out. If you have friends or family members, we would love to speak with them and help them as well. On top of that, final opportunity as we kind of move into next year, we are starting to see a bit of a bottom to the real estate market. Certainly there is not a need to rush out there and purchase anything, but things are starting to settle in majority of the major markets. We have seen significant declines. So if you are thinking of either getting into the market or potentially selling your property, moving up the market, it could be a good time in 2026. We do have interest rates now that are still around 4% on the fixed side, and overall in the last 20 years, that is historically pretty good. So if we can get a great price and we can get a good mortgage rate and all the numbers make sense, you might be able to get into a slightly larger home or your first home at a overall pretty good deal. So I appreciate you guys following me this year through all of these Bank of Canada updates. We will be here for you guys in 2026. I wish you and your families a very, very happy holiday season, and we can't wait to see you in the new year. Thanks again.